from Yahoo Suits. This is the Trading Bell. We're coming to you from the trading floor at the Nairobi Securities Exchange. This is a show that will endeavor to analyze what's happening in the markets, and we'll be having insightful conversations on some of the trends we are seeing among the listed companies, as well as educating you on why you should take an interest in the stock markets. On this first edition of the show, we'll be hosting Geoffrey Odundo, the Chief Executive Officer of the Nairobi Securities Exchange. We'll be getting some interesting insights on some of the aspects that have been defining the markets since 2017 and 2018. What is in store for the markets? Join me for the conversation. Many thanks for joining us.
Thank you, Abby.
Well, it's been an interesting 2017, now we're in 2018. Perhaps with hindsight, how would you describe how the markets performed as we closed off the year, being also an election year it was last year?
Thank you, Abby. 2017 was a very, I would say, interesting year for the exchange. We started the year on a very low note. As you may recall, the index went to as low as 2,700 points. And really that was really the effect of the spillover effect of what had happened in 2016, the issues around the capital gains tax and then the capping of interest rates, and all these affected the market greatly in 2016. So we're still feeling the ripple effects of that. Come 2017, being a political year, people started carrying out their own assessments of how the year would play out, and so we saw some level of withdrawal by investors early in the year. But as we progressed towards the year, a lot of confidence sort of built up to the month of May.
Yeah.
Then we saw sort of a run up to August 8th. Incidentally, after August 8th, August 9th, we had a new milestone. The index crossed the 3,800 points, quite unlike what was expected. And that continued to perform very well until September 1st, when there was an annulment of that election. Oh,
yes. And actually, we did see the market, you taking a decision to cool off and suspend trading for a while.
Yeah, we saw a very sudden drop in the price of stocks. And normally when you cross the 5% line within a short period, you need to make a call because you need to have the market calm down and then let everybody absorb whatever information is there and then restart.
So what would have happened had you not taken that decision?
Well, had we not taken that decision, we would have seen panic selling, a lot of panic selling, and it would have led to a rapid drop in price across counters, and really which would not have been supported by any fundamental factors. So it was more of a panic. People had never seen this happen anywhere in Africa, more so the foreigners. And so we had, under the rules, we were allowed to introduce a suspension in case in our assessment the market is actually not reacting to normal fundamentals, and that's what we did.
All right. And
the good side is that subsequent to that, the market recovered and even closed better than the previous day at the end of the day. So I think the whole scenario was very, very interesting because after that we had the second election on September 26th, and after that election the market's now recovered in a very, very nice way. So I must say we have closed the year 2017 at a fair level than what we expected. And 2018 looks a bit more promising because we've seen the first 2 months, we have seen some very, very good trades taking place and a lot of positive sentiments across the globe on Kenya, and I think it's going to be good.
All right.
Yep.
And you sit at a very vantage point, Jeff. Looking forward to 2018, perhaps what's your description of how the bond market has been performing? We've seen it's been trading pretty well. What has been behind this, and is it likely to be sustained in the long run? Yeah,
the bond market has been a very strong market in my view. I think both on the primary and the secondary side. As you have seen, the government, the central bank has been raising some very good sums of money from the market and at a very fine price. So what tends to happen is that when there's a fair pricing going on in the primary, then the secondary tends to trade well. and hence people get better valuations in the secondary market. So that's what's been sort of turning around the great performance in the secondary market. There's the valuation of the various bonds are very attractive at the moment. So
all right,
good time to make the money.
Good time to make the money.
Yeah.
And of course, many Kenyans are looking forward to the Emakiba, and we did see it attracted a lot of participation. Really, how would you describe the uptake? And eventually, are we likely to see more products come 2018 from the NSE?
So Emakiba was a very unique product, the first in the world, never done before anywhere. The whole product construct was a very Kenyan concept, and so there's a lot of thinking that had to go behind that product. We successfully built an infrastructure that even today we are proud to say that the market is trading on the secondary market. We were able to access all parts of Kenya, get over 300,000 new investors onto the bond platform, which in our view democratized the way bonds are bought and sold in this country. Now, our success, we actually assess our success by the level of inclusion that we brought in.
Mm-hmm.
It was a very difficult bond to sell during the political time.
Yeah.
Because it came in around August. We had to do an extension close to September, and hence it could not achieve the targets we desired. But looking forward, we already have 300,000 people who know what a bond is now. We are talking with the government to see whether we can make this a regular program, probably in smaller tranches than a big tranche, and so that people can know that every month I'll have a bond I can save.
Mm-hmm.
So a lot of conversation is going on with the government to see how we can have another issue program done this year.
Other than the Emakiba, what are some of the other aspects that have performed very well, especially when it comes to new listings?
We have a commodity ETF. So anybody who ever wanted to buy gold today can buy it on the exchange.
Yeah.
We have a real estate investment trust.
For the average Kenyan, the perception is that the NSE is elitist and it's not meant for the ordinary mwananchi who would want to invest. Perhaps into this new year, what are some of the deliberate attempts you'll be making towards helping more Kenyans towards understanding what happens at the NSE, as well as take up various products across the ranges that are actually on the market?
Right. The Emakiba was the beginning of how do we have a national trading platform, and we're so happy to see how the level of uptake was. Now, into this year, we hope that we can further innovate more solutions, both within the NSE and also with our trading members, to see how can Kenyans buy stocks from the comfort of their phones, laptops, and iPads. And last year, you saw one of the trading members actually did launch an online platform, and a lot more are taking up that effect. But we believe that Emakiba will inform us on how we can create a national platform even for the equity market, and that's what we're going to be looking at. The other end of things is going to be a lot of public awareness,
yeah,
especially on the new products. So you'll see a lot of, as we launch our new products, there's going to be a lot of media, social media, and one-to-one engagements to see how we can also educate Kenyans on the value of bonds, bonds and equities and other products. So I can say that our interest is to make sure the market serves all, to increase the level of participation of our retail investors who normally shy off until an IPO comes. We want to tell them the market is there, all these companies are trading, there's money to be made, so don't wait for an IPO, but just consult your broker and come to the market.
Looking at the range of products that the NSE offers, just walk us through some of the milestones you'd say, other than the Emakiba. What are some of the other aspects that have performed very well, especially when it comes to new listings and also bringing on board various cadres of investors?
So, Abi, I'd like first of all to just say that, maybe just inform the public that the NSE was ranked, the Kenyan market and NSE were ranked the 5th best market in Africa by the Barclays African Financial Index.
Correct.
For 2017, which was a very strong statement that one of the things they looked at was market size and market depth. They were happy to see Kenya progress in terms of offering new products. We introduced an ETF, a REIT, GDR is on the way, and a couple of new products, which is just shows progression to development, to deepen, to broaden the market.
Yeah.
The other thing that that assessment carried out was the level of awareness and innovation around the things that we do. So I must say that we will continue with that journey. Make sure that we introduce new products. Now the challenge we have is to really activate them across various markets. We have a commodity ETF. So anybody who ever wanted to buy gold today can buy it on the exchange. Yeah. We have a real estate investment trust. If you wanted to own part of a major building in Nairobi, you don't have to look for huge capital. You just come and buy the units. And there's a Stanley Fahari REIT. And many other REITs are coming, and many other ETFs will also be coming. So I must say it's about the Kenyans changing their investment psychology from brick and mortar to come to equities and stocks, which are more liquid and more attractive. So we're going to be continuing with that journey. The other key success that we have now is that we're now members of we've just been admitted as a member of the World Federation of Exchanges. Now, what does that mean? We are sitting on a very top, on the top table with all the top exchanges in the world, the Intercontinental Exchange, the New York Stock Exchange, Australian Exchange, and having the same conversation. So we are not getting information after the conversation. We are involved in the conversation. All right. What does that do? Investors now look at Kenya with a higher grading, and hence we're attracting a new pool of investors who have confidence that our infrastructure, systems comply with the best of breed in the other parts of the world. So NSE is going to continue doing that, making sure that we speak to all the investment classes with peculiar ways of products, communication, and access.
All right. Yeah. Very, very commendable, I must say. Right. And as we head to the tail end of the conversation, Jeff, what are some of the opportunities that lie perhaps in investments in the NSE? And also, are there areas that you look back and say, we would have done much better as a country when it comes to deepening financial inclusion, be it at university level, be it at high school level? Are there opportunities at that stage?
So, as you know, the NSE is the premier market in East Africa. So a lot of what we do also is adapted by our neighbors and brothers in the region. So we believe that we have the role to continuously be the first to make the move on various things so that we can be able to also pass those experiences to our other markets going forward. So the opportunities are huge. Yeah. I can say the NSE is looking at how we can increase the number of listings this year, number of REITs, number of ETFs.
Do you have any numbers, perhaps, that have made applications?
It's too early to tell. I think it's, I don't like to preempt them. Okay. But I can certainly tell you we are very convinced that we should get a number of new listings in the market this year. Topped up with that, we think companies should actually be able to come and raise additional capital for their businesses through the NSE because there is a lot of demand. There's a lot of capital looking to find a home, and with the opportunities are many. Now, on the area of what we can do better, I think there's us with our other stakeholders, there's need for us to really pass the education down to the real basic level. Yeah. I think if we could teach the curriculum on say what we study in the primary schools in business studies had a component of the stock market, I think it would be very knowledgeable, and as the children grow and advance in various levels, their appreciation of the stock market then becomes a very strong part of their individual development. And so we are going to see how we can also work with government, especially as they now design the new curriculum, to see whether this can be downstreamed and taken down all the way to a very, very fine level to allow this to really come up through a bottom-up approach. All right. Yeah.
And finally, I'd like to get your parting shot. Ideally, when people are talking about investments in the NSE, for the millennials, more of them are going towards other asset classes, be it land, be it cars. And what's the saving grace? Is there a future for the millennials in investing at the exchange, and are they going to be the next generation millionaires?
I certainly think so. I have nothing against other asset classes. I believe in diversification. So if you're going to buy land and buy a car, but also buy some stocks, I think you de-risk your investment portfolio by having various asset classes. But these new products we're bringing, it is the millennials' time to really become the next millionaires.
All right.
I mean, when you start trading on derivatives, you start trading on these ETFs, etc., it's happening during their time. So if they are the first movers, will come in and understand the products, trade them. They're internationally highly traded products, and they'll make the money. So my message to them is that they better get down and understand these products and come and find ways of how they can become the next millionaires, so to speak. Yeah.
Okay. Many thanks, Jeff.
Great.
I appreciate your time.
Sorry.
Looking forward to interesting 2018.
Welcome. Certainly too.
Well, that is Geoffrey Odundo, the Chief Executive Officer at the Nairobi Securities Exchange. Quite optimistic that 2018 heralds a new dawn, especially for the millennials when it comes to investing at the exchange. Well, we want to transition to our next part, and that is the financial analysis. Well, time for the market analysis, and today we are speaking to Samuel Gishohi, who is the Business Development Manager at NSE Securities. Many thanks for joining us.
Thank you for having me.
Interesting week. We're seeing a lot of movements, especially among some lot of the stocks that are the big movers in the index. Perhaps, what would you make of this?
Well, we have you'll notice that most of the indices were in the negative, and we did see companies like Unga Group gaining by about 45%, and that is really because there's a takeover bid by Seaboard Group for Unga Limited.
We've seen that share particularly perform very well when it comes to the valuation.
Absolutely. Immediately, investors here of a takeover bid, they expect that there's going to be, you expect there's going to be a lot of interest, and there's going to be a lot of investors who want to be in that stock when it's coming on. But what you'll really notice is the indices have remained in the negative despite such big moves, where we are seeing Unga, for example, and other smaller companies which are not on the NSE 20 index. Usually you'd find that if it was, say, Safaricom or KCB that had made even a 5 or 6% gain, then you would actually see that on the index because as a positive move, because then those are the heavy hitters, they're the blue chips. Whereas the smaller companies, the volumes tend to be very small. You might see sometimes you find that low liquidity, high returns or high move can be also under a very low liquidity level, which means not many volumes actually moved. It was just that there was a lot of demand and the share price just moved up. Yes.
Interesting that you bring that up. I'm looking at the NSE 20 share index. It's been performing pretty well since the year kicked off. Right now we are seeing this week it's recorded a negative 1.15% drop. Perhaps what does this signify moving forward?
Well, I think right now you're looking at a lot of investors got in. They're waiting for the announcement season to come. That tends to happen within 3 months. For those companies whose year end is December the 31st, they will tend to start announcing before the 31st of March. So they have a 3-month window from their year end to their announcement date.
Correct.
So we do expect between now and mid-March or late March to see those announcements, particularly the financial sector, the banks, KCB, Equity, Cooperative. And if you look at last year, January, you'll notice that January, February, most of the movement on the market was triggered by KCB announcing their results, and then the other banks came on. The market realized that the effect of the interest rate capping had not been as much as was expected. So then again, when the announcements start, then you will see more action or more focus on the market.
All right.
Yes.
And Sam, looking at some of the big movers, I'm seeing 3 banks, KCB being on the list, Equity Bank, NIC Bank. Perhaps what's happening in the banking sector that is triggering a lot of this activity?
Well, same thing. People are taking positions because of what expectations they have on the results. Of course, at this point, it's very speculative. Some people are expecting that they will have good results. Others are probably getting out because they feel skeptical about, the effect of the interest rate capping and the credit squeeze on the bank's performance. So everybody is taking their positions now, because once the announcement happens, then you don't want to be acting too late. You want to act right now on a hunch, and of course sit back and wait, and if your hunch is right, then you're on the right side of the court.
And talking about someone's intuitive ability to perhaps discern what's happening in the markets, I'm looking at some of the biggest movers, biggest gainers and the losers. I'm not seeing the top 20 companies among them. What's not happening there?
Well, that's normally an indication of a slow period on the market. If you look, you realize that there's not much in terms of, there's a lot of movement on the big hitters, the KCBs, the Safaricoms, and the cooperatives, but the gains on the share price or the losses are not that much. So sometimes when this happens, you'll find that focus now shifts to the smaller cap companies, which you will not see being very active, during times of a major bear or a major bull run. They probably don't affect the index very much, the indices, but you'll tend to see them being more prominent in moments when it's quiet, because then a lot of the activity that is causing movement in share prices is really local driven, so it tends to concentrate on the small caps.
All right.
Yes.
And of course, for that viewer who's trying to still figure out what is all this, I'm quite interested to see there's a lot of issues coming up when it comes to financial literacy. And of course, we'll be delving deeper to help people to understand what it takes to invest in the stock markets. Yes. But from an amateur point of view, Sam, is it the best time to buy right now with all the issues that we've been discussing, or is it a time to wait and remain cautiously optimistic?
Well, on a speculative level, yes, it's a good time to buy. We're coming from a very deep bear, which ended around January last year. Most of the stocks have not yet, rather maybe halfway what they had lost, and we are expecting to see a rally. And usually the 2 years after every election, we usually see a rally. And so now is the time to get in, so that you're sitting in there. And usually as we go towards now the next electoral period, which is 2-3 years down the line, we do expect to have a bullish period, because then, a lot of focus now goes into investment and recouping whatever has been lost.
Right.
So right now is a good time. You see that a lot of these stocks had lost heavily. They did recover quite a bit last year, but they still haven't reached places where we call it oversold, where they are overbought, where the prices are too high, and you're just hitting new record highs. So we are in a period where we believe that we are getting into a bullish market, so it's a good time to be buying. Then January and December again, a lot of people
Pretty difficult
sell-offs.
Yeah.
For school fees and holiday.
All right.
So then again, as money gets back into people's pockets and they start looking to invest because of disposable income, then the tendency is to push the market up.
Yes. Right. Many thanks, Sam. And we did notice that there are a lot of jargon used there by Sam, from bull run, markets rallying, bear market. We'll be having a segment that will be seeking to answer some of your questions, and that is Market 101. And of course, that is the next coming up. Well, it's time for Question of the Week, and this is what we gathered from the streets.
I'd like to know the listing requirements for startup companies in the growth enterprise market segments.
The growth enterprise market segment was created for smaller or medium enterprises, and this market segment is designed to try and help grow the listings on the Nairobi Securities Exchange. For that reason, you find that companies that have capitalization of around 10 million shillings will be allowed to list on the market. One of the things that is good about the GEMS is because being cognizant of the fact that some of these smaller companies are not very well corporatized, the Nairobi Securities Exchange has nominated advisors, which are investment advisors or investment advisory companies like stockbrokers or investment banks who have been given the role of nominated advisors to be able to advise you and to help you to structure and to prepare for the requirements of listing. So the best idea when you're looking to list a small and medium enterprise is to approach any registered nominated advisor. They're called nomads, just like NOMAD, and they will be able to help you to figure out what is needed and all the documentation that you would need. And they will be there to hold your hand through the whole process to make sure that all the compliance issues that you need to have in order to list the company have been done. Thank you for your question.
Thank you as well, Sam, for making time for us.
It's been
Always a pleasure having you on the program.
Thank you for having me.
Well, and that's it for the market analysis and your questions. Well, that marks the end of the Trading Bell for today. Many thanks for your valued company. And remember to interact with us on our social media pages and also text in. Well, from us, it's a wrap. Have a lovely afternoon. My name is Abi Agena.